I first became aware of Symbotics in July of 2023. That's when I made my first purchase at $41.30. It's been trading sideways, if you'll look at a chart, ever since then. And I think it's just that Wall Street hasn't woken up to exactly what it is and how it's going to progress. And it has just started to make money. As I said in the intro, they had a wonderful first quarter. First quarter of Q1 23 revenues were up 59%. And I guess what really got me interested in it was their projections in the future. They're right now saying that their earnings per share will grow in 2024 from 2023 a negative 3 cents to a positive 21 cents. Well, that's an 800% growth in earnings. And then in 2025, it's going to grow to 55%. So that's another 162% growth in earnings. And 2026 up to 89 cents. In 2027 up to $1.10. So they're growing as fast as they can. The big takeaways that I got from the earnings call that I just listened to was, number one, they've bought some of Jensen's chips so that these robots can not only sense the box by its size and its memory of size, but it's also now got a chip in it that they can see. So they can see a box and they can see if it's damaged, what its size is, and they have a memory that's programmed in, so they're going to get more and more efficient. As Rick, the CEO, says, the other element is the more efficient we get, and then the speed. These bots move at about 25 miles per hour. As he says, our earnings and our revenues will increase with the increase of the speed because we can do more work in less time. And it's kind of an interesting equation. If what you're doing is being building revenue by the amount of product that you get into those semis in a given period of time, the speed basically increases your earnings. So that's part of it. The other thing that just knocked me off my feet, I've listened to about 3 of their earnings calls now, and they always talk about their order backlog. And what an order backlog is basically that Walmart and Target and grocery store and liquor companies basically say, we want you to convert our warehouse. And they say, well, right now, last year they did 3. They're up to a total of 18 in place. I'm sorry, but we can't get to you for a while. But if you'd like to get in line, sign a contract for us to come and do the work for you. Well, they have in their backlog $22.8 billion worth of orders. So I went and divided that by last year's revenues, and that means they have 13 years of work on their books. That's right. They're booked up for the next 13 years. Now, will it take 13 years to get there? No. They're hiring outside contractors to help them do this. They're building the bots as fast as they can. So they're projecting that the 3 of last year will turn into 5 next year, and then the 5 of 2020, what would that be? 2025 will turn into 8 in 2026. And so they'll exponentially grow and they'll catch up with their backlog. And as Rick says, it used to be we had to go out and knock on doors and say, look at what we can do. And now it's people knocking on our doors and saying, how soon can you do it for us? And again, think of this in a logical point of view. If you're having trouble hiring qualified people, if you're dealing with someone coming and saying, we want to unionize your shop, and think of this just from the point of view of Amazon. When I saw this, I recognized that Amazon is doing similar, but not near at the scope of what Rick is doing and what Symbotics is doing. So my next thought was, at what point will Amazon say, we're not going to be building our own robots. We're going to go to Symbotics, and we're going to convert all of our distribution centers to this level of production. And again, these people are using NVIDIA's chips to identify. Now, the other thing that they're doing is right now they're doing what they call non-perishable items. So this would be like as I say, a Target or a Walmart warehouse. But Target and Walmart also run grocery stores. And so now what they're being asked to do is to do it for refrigerated and perishable items. And so as Rick explains, that changes the whole dynamic. It increases the price per foot by having refrigeration in the warehouse so that perishable items can be taken care of. And it increased, I think he said the warehouses cost us about $100 a square foot. And then I may be wrong on that. And then when you go to perishable items and refrigerated items, it goes to $200. And then if you want frozen items, it goes to $300 a square foot. And again, don't hold me to the square footage price, but the relevance to it. So you can just see the demand for something like this as supply chain, as we know, becomes more and more important and more critical. And you take it out of the hands of human beings and put it in the hands of robots that don't require 401ks, healthcare plans, and never talk about unionization. I mean, I'm just thinking if I had a situation like this, why wouldn't I want it? Well, the first question would be, well, I can't afford it. I can't afford to convert my warehouses to that. So Rick, with the help of SoftBank, has created a solution for that. And what that is we'll go build a building that has this capability, and then you can come in and just lease a space in it. Or, as they said, we'll mix your boxes with everybody else's based on the most efficient way, whether you're a grocery store or a drugstore or whatever, and you need space within this. They call it green box, and it's SoftBank is behind it. And so SoftBank is putting the project together. Again, think of in your city, they build this or convert this huge warehouse, and 15 retailers say, I want to be part of that project, and then you get billed by the space that you're using. And as Rick says, it's much more profitable, but it's also a little bit more complicated because we got to sort things out and make sure we don't send the wrong product to the various stores. But he says it's complicated, but it's a service that is in high demand. So they're broadening their TAM, their total addressable market, through this collaboration with SoftBank. So my projections and what I do is I analyze their past growth and how their price of their stock is affected, and then what their projected earnings per share are and how that relates to their stock price. And based on an increase of 800% in earnings per share in 24, 162% in growth in 25, 62% growth in 26, and 24% growth in 2027. Based on my projections, I'm projecting the price is going to be $194.03, up from some $40 per share today. I just don't see how you can hold this back. And where it goes from there, again, with a backlog of $22 billion or 13 years of current production, this thing is just going to explode. And when Amazon wakes up to it and some foreign grocery companies, unless someone comes and can do it better, and as I say, that they've been at it a while. So that's a stock I think you need to have in your portfolio. Do you go crazy with it? No. First of all, no stock in my portfolio represents more than 5% of the total value of the portfolio. But this is a growth stock. This is one that they aren't talking about on CNBC and Fox Business and Bloomberg. At least I haven't seen it. And that's what I'm here to do for you. I enjoy digging. I enjoy listening to these earnings calls and understanding what companies are doing and where they're going to fit into the future and how they're going to use AI, which means they're using semiconductors to take us to the new world. And that's exactly what this is going to be, a new world. I'm Kerry Grinkmeyer. I'm a retired financial advisor. I'm here to help you make money. And I'd ask you, if you want more information like this and to be able to sit down and talk with me and our other tribe members, just get on the bus. It's a $60 a month program so that you can have access to my research, my cheat sheets, the way I analyze stocks, and maybe I can help improve your life. I'll talk to you again tomorrow.